Today, we're digging into a really fascinating story about a bank at a crossroads, South Indian Bank. They just dropped their latest earnings report, and it really tells a tale of a company that's just finished a massive, and I mean massive, cleanup job. And now, they're staring down their biggest test yet. Can they actually start growing again? Okay, let's get into it.
The first number that just jumps right off the page is this one, a 32% increase in operating profit compared to last year. Now, on the surface, that looks incredible, right? It sounds like a bank that's absolutely firing on all cylinders.
But you know how these things go. That big headline number, it's almost never the whole story. So you have to ask, what's really going on under the hood here? What's driving this big profit number? And is it actually sustainable?
So let's start with that report card. We'll take a quick look at the headline numbers that have everybody talking. And really, no matter how you slice it, these numbers are strong. Net profit's up 10%, operating profit is up that huge 32%, and check out their asset quality. Their net NPAs, bad loans, have been crushed down to a super healthy 0.68%. Oh, and their total business just crossed the 2 lakh crore mark, which is a huge milestone. These are some seriously solid numbers.
So the big question is, how did they do it? Because this wasn't just about making more money. It was about a very disciplined and probably pretty tough cleanup operation.
And this right here is a huge piece of the puzzle. While their income was going up, their day-to-day spending stayed completely flat. And a big reason why is that they cut their headcount by 5%. They basically just didn't replace people who retired or left. It's a really effective way to pump up your profits for sure.
But here's the kicker. And this comes straight from the CEO, PR Seshadri. He basically admitted on their earnings call that they've squeezed that lemon dry. You can't just keep cutting costs forever and expect to grow. They've hit the limit.
And that brings us right to the heart of their story today, the growth dilemma. Okay, you've cut everything you can. You're as lean as you can get. Now what? How do you restart that engine and actually get moving again?
So the bank has to do a complete 180. They have to pivot their entire strategy. The focus has to shift from playing defense to playing offense, from cutting costs to driving growth, from shrinking the team to investing in people who can sell. It's a total mindset change, from internal cleanup to going out and finding new customers.
And you can bet the market is watching this super closely. An analyst on the call put his finger right on the problem. He basically asked, so how are you going to balance saving money with, having to spend money to actually grow? That's the tightrope they have to walk now.
Now, let's see how this is actually playing out in their business. This chart tells a wild story. On one hand, you've got their consumer loans just exploding. Home loans are up 66%, auto loans up 27%. But then you look at their MSME loan book. That's lending to small and medium businesses, and it's flat. A big, fat 0% growth.
And that's the mystery here. The bank has been building all this cool new tech, all these new digital tools to make it faster and easier for these businesses to get loans. But all that investment? It hasn't moved the needle at all. So why is this engine they built just sitting there, stuck in neutral?
Okay, so that's the problem. Now, what's the solution? Let's look at management's 3-point game plan to try and finally solve this growth puzzle. But first, you got to understand their philosophy here. They're not just chasing higher yield, going after the riskiest loans just because they pay more. They're focused on what they call better yield. It's about finding that sweet spot, a good return, but with a risk level they're comfortable with. It's all about smart growth, not just fast growth. So here's the playbook. Step 1. Actually unleash all those digital tools they've built. The CEO thinks this will get new salespeople up to speed way faster. Step 2. Keep pushing outside their home state of Kerala to find new customers. And step 3. Actively hunt for those better yields by focusing on things like MSME and gold loans.
And check this out, that second part of the plan, it is working. Big time. A massive 70% of the bank's loans now come from outside its home turf in Kerala. That's a huge deal. This diversification is critical for their future, and it proves they can go out there and win in new markets.
So, the bank has cleaned up its act, and they've got a game plan. But is it going to be enough? This brings us to the final part of the story, the really ambitious goal and the steep climb they have ahead of them.
After all this hard work, the cost-cutting, the new tech, the restructuring, what's the end game? What's the big prize they're shooting for?
It all boils down to this one number, 1.5%. That is their 3-year target for return on assets, or ROA.
That number is basically the benchmark for a really efficient, really profitable bank.
So what is ROA? Well, think of it this way. For every dollar's worth of stuff a bank owns, how many cents of profit can it squeeze out? Right now, South Indian Bank is at about 1%. Getting to 1.5 might not sound like a lot, but trust me, in the banking world, that is a massive leap.
And not everyone is convinced they can do it. As one analyst on the earnings call put it, pretty bluntly, he said, "I still believe it is a tough ask." That kind of skepticism really highlights the challenge they're up against.
But the CEO is pushing back with a lot of confidence. His argument is basically, look, the reason we weren't growing before wasn't the market. It was us. It was our own internal mess. He thinks that now that they've fixed all their historical problems, the path to growth is finally wide open.
So it all comes down to this, doesn't it? South Indian Bank has done all the hard work. They've cleaned their books, they've built a new engine. The question now is whether they can actually put the pedal to the metal and power past their old limits. They passed the cleanup test for sure, but the growth test, well, that's just getting started.